This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India's fuel demand is likely to grow 4.7% in the next fiscal year beginning on April 1, initial government estimates showed. Fuel consumption in 2023-24, a proxy for oil demand, could rise to 233.8 million tons from the revised estimate of 222.9 million tons for the current fiscal year ending in March, according to government forecasts. The estimates were released on the website of the Petroleum Planning and Analysis Cell, PPAC, a unit of the Federal Oil Ministry. India is the world's third biggest oil importer and consumer.
Oil prices firmed on Thursday after Brent crude posted its biggest one-day loss for 7 weeks in the previous session, with gains on Russian supply curbs capped by an expected rise in U.S. inventories. Brent crude futures rose 84 cents, or 1%, to $81.44 a barrel by 12:48 GMT, compared with about $98 a barrel on the eve of Russia's invasion of Ukraine a year ago. West Texas Intermediate Crude Futures, WTI, advanced 80 cents, or 1.1%, to $74.75 after 6 sessions of losses. Lending support to prices, Russia plans to cut oil exports from its western ports by up to 25% in March, exceeding its announced production cuts of 500,000 barrels per day.
Moving on to the top news in the energy sector.
Indonesia has boosted imports of gasoline by about 32% in February ahead of the Ramadan festival in March, data from Enterprise Singapore showed. Asia's biggest motor fuel buyer has raised its imports of the fuel from Singapore to about 744,000 tons in February so far, compared with a monthly average of about 565,000 tons in the past 3 months, the data showed. In the same period of February last year, Indonesia bought only 313,000 tons of gasoline. Traders said the Southeast Asian country could be stocking up ahead of the Ramadan holiday period.
1 year after Russia invaded Ukraine and sent commodities into turmoil, it's clear that the main takeaway is that markets are remarkably resilient and adapt quickly to changing circumstances. While the attack on February 24 last year initially sent prices for commodities such as crude oil, liquefied natural gas, LNG, and coal skyrocketing, they have all returned to, or fallen below, the pre-invasion levels. The commodity trading world has effectively and in a short period of time managed to reroute Russian exports of crude oil, refined products and coal, as well as adapt to the loss of much of Russia's pipeline natural gas. Next, we have the top news in metal markets. Copper prices fell on Thursday as the prospect of further U.S. interest rate rises sent a ripple of caution through markets and boosted the dollar, making metals costlier for buyers with other currencies. Benchmark 3-month copper on the London Metal Exchange, LME, was down 0.3% at $9,087.50 a ton in official ring trading. Prices of the metal used in power and construction surged to a 7-month high of $9,550.50 a ton in January as the dollar weakened.
Dalian coking coal futures scaled an 8-month peak on Thursday as a large-scale coal mine collapse in northern China's Inner Mongolia region prompted safety checks, fanning fears of supply tightness. Chinese leaders have sought a quick investigation into the cause of the collapse that killed 4 people and injured 6 others, with 49 missing. The most traded May coking coal on China's Dalian Commodity Exchange, DCE, ended daytime trade 2.6% higher at 2,020 yuan and 50 fen, $293.35, a ton, after hitting 2,085 yuan, the highest since mid-June.
We will now look at the top news in the agricultural.
India does not plan to lift a ban on broken rice exports and cut a 20% tax on overseas shipments of white rice as the world's biggest exporter of the grain tries to keep a lid on domestic prices, 2 government sources said on Thursday. New Delhi's rice export curbs will force buyers, especially in Asia and Africa, to pay more for the staple that has become expensive in the last few weeks. India banned overseas shipments of broken rice and imposed a 20% duty on exports of various other grades in September 2022 amid concerns over production due to below-average monsoon rainfall in key growing states. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.